got great markets, I've got to tell you. Lots of records sitting out there. Well, the biggest external influence on our economy, our markets, if you like, is China. Today, its government set a target of 5% economic growth for this year.
The main expected targets for development this year are a GDP growth of around 5%, with over 12 million new urban jobs to be created and an urban survey unemployment rate of around 5.5%.
Li Qiang, the Premier there. Well, it's clearly ambitious when you consider collapsed property developers and also the plunge in the savings of ordinary Chinese people. China's stock market was clearly unimpressed. It fell after that speech. So let's bring in here Sky News Asian correspondent Stas Butler, who joins me now. Stas, many thanks for your time. Just tell me exactly the reaction, the market reaction says everything here. But, you know, it is pretty tough for China to get this growth, especially when it's got consumers, its whole retail sector affected right now.
That's right, and the lack of stimulus has disappointed people watching this announcement very closely. I mean, there was an expectation, as you say, 5% growth, the same number as last year. Inflation, the figure staying the same there. Unemployment also meeting expectations. That deficit ratio only at 3% for the budget, a little less than to be expected. Expected a little more leeway on that. But yeah, I mean, really, why there hasn't been this kind of big, as they call it, bazooka-style stimulus to revive demand on among kind of Chinese consumers? I mean, people are speculating about exactly why that is. Some say it's kind of it's an effort to control debt in local municipalities, and particularly to kind of rein in the property sector, which, together with related parts of the economy, makes about 20% of GDP, so a huge amount of the economy. But it's also perhaps partly ideological that Xi Jinping and Beijing wants to set itself apart from the West, handing out kind of COVID checks during the pandemic, and also Li Qiang describing China as having a great immune system economically at Davos earlier. That's one way of looking at it. An economic expert I spoke to put it bluntly. She said China has got no plan.
Yeah, it seems to be that way. And the one place you can see the lack of a plan is in infrastructure spending. It's up marginally, but if you were going to try and re-stimulate your economy, that's where the spending would have been, which would have been great, of course, for Australian commodity producers such as the iron ore miners.
That's right. I mean, iron ore making up about 100 billion Aussie dollars worth of exports to China in 2022 and 2023. So that would have been, a key place that exporters have been looking for support, that infrastructure sector. I mean, thankfully, so far, Australia's, iron ore sector, the exports have kind of weathered the storm mostly of the past few years when it comes to some of China's difficulties. That's partly because of the big push, which was continued in Li Qiang's speech today, in these new sectors such as EVs, electric vehicles, also for batteries and also renewable energy as well. So still likely to see a continuing drive, but yeah, certainly, as you say, not the kind of the sweetener that perhaps some at home would have liked to have seen.